Noon, good evening, all around the world to Truflation listeners. We appreciate you checking in with us here for the monthly pre BLS CPI Truflation Spaces. We're geared up to have a really nice panel to get you all up to date on inflation analysis, but to also work a little bit um, around the idea of digital assets, and in particular, the Bitcoin ETF talk that's been so um, in the zeitgeist lately. We've got Joe Olszewicz, who will be here to discuss that. Legendary trader, a guy that really has a lot of cred when it comes to the digital space, and really someone that we can count on to, kind of give us the insight, the inside scoop on on Bitcoin and digital assets. Um, let's see here. I'm trying to vamp a little bit so I can get everybody in to speak. Um, let's see. Requesting here, getting speakers in. Sorry about this, everybody. There's usually a little vamping that goes on the first couple minutes to get everybody settled, but it should be a good show. The usual, again, the occasion is day before the Bureau of Labor and Statistics. Their official CPI comes out tomorrow, and we're always ahead. We're always way ahead, and so we usually have our inflation analysis and go in depth to let you get a chance to ask questions and and get sort of the inside scoop there. But again, we've got a very special guest today as well with Josh Olszewicz. He's a legendary trader, a Bitcoin trader. Has been around for a long time, deep in the space. Um, Please excuse my voice. Been sick for a while. Tried a cough drop. Tried some honey. Tried some tea. It's just going to sound like I'm drowning the entire time. So hopefully we'll get somebody in here real fast to take over from my speaking, but still waiting for a couple to join us. Um, I guess we could start off with our head of data, Ivan Yelik. He's kind of the man out at Truflation. All the math, the thinky thoughty graphs and charts you see come by way of Ivan, and he does just an excellent job. Um, Ivan, could you kind of give us a little update here on the state of the Truflation Nation with regard to data? Maybe some of the projects that you can tell us about that you're working on for the future. I know there's a big move towards different types of index. We put out a poll recently on what index people would like to follow, like meme indexes. Anyway, I'll just throw it to you real quick to kind of ask how are things in data land for Truflation?
Hi, and great being on this spaces again, and looking forward to tomorrow's CPI numbers. And as busy as it is usual in Truflation, new indexes coming out. You mentioned the memed indexes, the Big Mac. So I assume that one is coming first based on the votes of the audience, and we did offer a few more that are interesting, especially if you take into consideration that we should or could enter the bull market soon. So Lamborghini price index is quite relevant for this industry in those periods. And then I believe the third option was shitcoin index or something similar. So also quite relevant in bull markets because a lot of those do come to surface, but a lot of things happening. And besides the memeable indexes, we do plan to release one before the end of this month related to more focused on the electric vehicles, but that is in the pipeline and should be announced pretty soon. And a few more, but wouldn't disclose too much info since it's still in the baking phase.
Yeah, I remember internally, it got us all cracking up. Someone was suggesting a cocaine index, and I loved your comeback. It would just be hard to source the pricing for that.
Yeah, I think it will be quite hard to find some reliable data sources. You could find the price, but something that's updated daily or on a regular frequency, I think it would be quite hard to find a reliable source.
To say the least. Um, anyway, appreciate the update there, Ivan. We now turn to the CEO of Truflation, and that, of course, is none other than Stefan Roost. Hey, Stefan, I heard you're back in Europe still. What's the state of the Truflation Nation? And thanks for coming on again.
Well, exciting times, right? And maybe macroeconomic wise, there's still a lot of room for improvement. But we today we're expected to hear. Well, we were supposed to hear it about yesterday, but there was some, the ETF, so they're going to get approved today. So that's going to be exciting. Hopefully, these custodians can manage their keys a bit better. But fortunately, we have Coinbase as a custody for most of these ETFs, so that should be pretty secure hub for storing the bitcoins for all these ETFs. But yeah, otherwise it's it's funny. The world, the tech industry is going really strong. There's a lot of innovation taking place. The economy is still pretty solid. The consumer's still spending. Um, Markets in crypto are also very active, and have really experienced a good year as well. So the sectors that are experiencing innovation and are, as a result, slightly more competitive, are driving down a lot of the costs, increasing productivity at the same time, is are flourishing and are being rewarded for that, which is a great thing to see. Um, and at Truflation, I think one of the things that we're beginning to experience is, we're getting a bit of support for the work that we've been doing for the last 2 years, trying to provide this independent source of truth around how economies are really performing versus a narrative that is using old data collected manually, edited, and let alone if they can't change the narrative to their favor, they go and change the methodology. And I think people just don't believe that anymore. And as a result, are looking for something modern, fast, automated, real time, and transparent. And I think that's something that Truflation has really, had at its core ever since we launched. And we want to continue to keep that going. And so, yeah, hopefully those rewards begin to slowly start paying off all the work that the team have been doing, and all of you as well, the community, in giving us that support in making this a reality.
Very nice. That's as good a segue as any into the overall economy to hand it over to our head of product. He does the inflation analysis every month, and this month is no different in that it's a 21 pager. It's beautiful. There's a nice abstract or an executive summary up front. So if you don't have time to read the whole thing, at the second you see it, you can get a nice snapshot. And then he just goes into granular detail, every aspect. A fantastic read. You can get that by subscribing to Triflation Premium, which we'll link to after the spaces. But what's nice about if you do listen to Triflation Spaces, you get a nice a preview here of that report. Again, we appreciate having him on. He's a busy dude. He's all over the websites, podcasts, television. It's none other than head of product, Oliver Roost. Oliver, thanks for coming on, brother.
Thanks a lot. Thanks a lot for having me, Rourke. I love the intros that you make for me. I think it's over exaggerated, but it's good to be back. um, yeah, so a quick highlight of the December numbers. I think we've ended the year of 2023 with a surge and a bang. The festive season, no doubt, has brought some whirlwind shopping, whirlwind traveling, to a certain degree, where they're actually even higher than they were in 2019, as in pre-pandemic levels. So I think, echoing on what Stefan was saying around, the market's strong, the positivity, the consumers are feeling that as well. So, I think the biggest driver in that on the update for the inflation, of course, is that the labor market remains tight, right? And that has pushed up, whether it's the wage increases going up faster, that's accelerating, the unemployment staying the way it is, it's whatever those factors are, they are driving up the prices of services in the inflationary measurement tools. And we're not expecting this trend of the tight labor market to reverse anytime soon or to alleviate anytime soon. I think we'll see some reduction in temporary staff that people had hired over the festive season, but we see that every year. And so we're not expecting that to be any different this year than what we've seen in the past. At the same time, we've seen consumer spending remain sincerely strong in October. In October and November. November was up 4%. And then in December, again, very positive again. And it's again, the surge is certainly being then echoed by the consumer sentiments or the consumer confidence, ending the 2023 with a massive boost in confidence because of the restored optimism in the current business conditions and the job availability. So with all this in mind, it's certainly, we expect the inflation to remain sticky and to be hard to shift. I think we'll start to see a bit of a downward trend in January post the festive blues, but then that to revert back. Talking about where we're expecting the BLS to announce its numbers for December, we're expecting them to come in at 3.2%, with market estimates ranging anything from 2.9, I've seen the lowest, up to 3.5 is the highest. But I think the general market consensus is somewhere between 3.1 and 3.4. What are the sort of key highlights of the inflation report that Warwick was talking about? Look, I think on a very short summary wise, transportation has been a key category again, where we have seen falling gas prices coming down for a third month in a row and a significant drop. And that it is despite, and I say despite, the oil prices in the month of December being relatively stable. It's gone ups and downs, but the price of where we've landed at the end of the month is somewhat relatively stable. Car vehicle market in the transportation category is coming down, and it's because of the excess supply and the inventory. So all in all, it's certainly the transportation category has certainly been driving inflation downwards. The other major category to drive inflation downwards is housing, and that seems to be losing steam despite the 30-year fixed and 15-year fixed mortgage rates coming down a bit. But there is also significant supply shortages that has halted demand a bit and then brought the prices down. But we still believe that there is an affordability crisis that's set to continue in the US, and it could be a big reversal. It could be the one category that could jerk a reversal in inflation as it goes forward. The other categories that are driving prices upwards to reverse that trend of where housing and transportations are dropping it down are food, health, household operations, communications, education, recreation, and culture. So hopefully you get the drift there. That's all the services-based element, which counts for about nearly 45% of the total CPI measurement. So, they're all driven up because of the tight labor market, and that's set to continue. We are expecting the core inflation to go up as well. Currently, the core inflation was around 4%. We're expecting that to come down to about 3.8. But the headline inflation, be around 3.2%. That's on a year-on-year basis. Apologies. So basically, that's the key takeouts of the report. Looking a bit further ahead into the end of quarter one, where we see that, I think if we assume a number of factors that are happening in the next quarter, but if we assume, for example, that the interest rates are unlikely to move in the quarter one, which I think is very plausible given the data sets that we have on hand at the moment. If you assume that consumer spending will remain relatively strong, labor markets staying tight, and the supply bottlenecks that are mostly evaporated, except for the onshoring capabilities of green energy and semiconductors, which will drive prices up again. We should expect to see inflation hover, gradually decline, decline in the month of January, but then go back up again, end the quarter somewhere around 2.7 to 2.8%. But then it will remain really sticky from there on. Any movements of that upwards or downwards is going to be affected by any geopolitical risks that are around that might cause continued supply chain pressures on either commodities or other products or services. So that's the key takeouts. I think we're expecting it to take a marginal uptick, as we said, from 3.1 to 3.2, with a longer term outlook to see marginally decline, but no changes in interest rates in the short term.
You are listening to Truflation Spaces CPI analysis ahead of the BLS print tomorrow, and a Bitcoin ETF discussion with legendary trader Josh Olszewicz. If you want to get the CPI analysis that Oliver just spoke of, get out to Truflation.com, grab a premium plan, and you will get a really cool kind of individualized dashboard, all sorts of exclusives. And of course, you will get the report, which, again, if memory serves, it's a little over 20 pages, and just all the data you could possibly want. Nice segue into our guest of honor here, Josh Olszewicz, who's I really appreciate his take over the years. Bitcoin and crypto can be kind of clownish. To be honest with you, kind of stupid. And from the Bitcoin boys and all the different characters that kind of run around in the space. And Josh is one of these calm, sober figures. He does trading analysis on his YouTube channel. It's not financial advice. It's more like tutorials. He never does crazy $1 million or I'll cut my private parts off by XYZ date. He just kind of gives you the straight dope, no chaser. And again, he's one of these voices in Bitcoin that if you want people to kind of take the space seriously, you point them to Josh. You point them to his analysis, his Twitter handle, and you always get a really nice take. And I'd say he's largely bullish, obviously, but he's been in the space forever, for as long as I can imagine. For as long as I can remember, rather. So it's good actually to have him. Kind of fortuitous. We didn't really plan it with all the Bitcoin ETF talk. I stupidly predicted a Bitcoin ETF to happen in the summer of 2018. So that'll tell you about my prognostication capabilities. But anyway, Josh, we really appreciate you coming on, man. Thanks so much.
Hey guys, yeah, thanks for having me. Let me just say, Truflation's been such a great tool for the crypto native who didn't need to care about macro. Macro for, so I've been in crypto since 2013, and I didn't know anything about macro. I didn't know anything about trading before then either, but Truflation's really been helpful to sort of steer the ship because you guys provide some realistic and sober data. So that's super, super helpful, super effective to peel back the onion and see what's going on there. And I just hope that the Fed has a similar dashboard. I'm afraid to think that they don't, because a lot of people think they don't. People who've worked at the Fed think they don't. And that's super scary to me. But yeah, we've never, for the past X number of years in crypto, we never really cared about inflation. We didn't need to care about inflation because it was kind of tamped down, right? It was ZERP policy and 2% or less. I just encourage people, even if you think Truflation isn't great, everything is a data point, right? So it is what it is, and you don't have to take it as gospel, but it is a data point. Just like going to a restaurant and seeing busy, you need a reservation, busy airports, right? Everything around you is a data point, seeing businesses go under, that sort of thing, on Main Street or whatever. And go ahead, sorry.
Oh, no, it's all good. I was just going to say, Yeah, I've noticed that Truflation is kind of begrudgingly becoming part of the conversation, and that's a good thing. Like you say, it's just another data point. My first question to you, that you already kind of answered, is, do you use efforts like Truflation in your calculus?
Yeah, so I worked previously at Valkyrie, and when I was there, we every week I talk about Truflation because trying to navigate what was going on was super important. And you guys had like the preview, the whisper data, the underground stuff that I don't know how people don't pay attention to stuff like this, because the Fed releases a number on their Fed Nowcast or whatever, but yours is certainly more granular. It was directionally correct. It was super correlative to what's going on. So when I saw all the bashing a couple months ago, I see less of that now because obviously you guys have been so correct. But it just baffled me that you don't have hate it or love it, whatever, but it's a tool, right? So Mike, I have a question
Yeah.
for you guys actually. What is your prediction for returning to 2% realistically, if that's even a possibility, and staying at that level? Just because there's been a lot of talk from the macro people who know way more than I do, like Bianco and DDB and Bolello, about this double dip inflation stuff.
Yeah, I mean, Oliver will be able to chime in a bit more, but I mean, my view is, I mean, we're already in real terms, in true terms, we sort of believe we're at about a 2.2% right now. So that's what we think is a more accurate reflection of what is really happening in the market. And that is basically based on last year's number, right? So this is down from, let's say, a 6.5% that we experienced at the same time last year. Um, so in theory, we're at that magical number. We do, however, feel that it's going to go up again. I mean, I don't think it's going to stay down at all. We see oil, commodities. I think a lot of people are going to see an increase in commodities. We're seeing a breakdown in the supply chain where onshoring is now a bigger topic at hand, which means we need to build out factories onshore. What does that look like when we build out factories onshore? It's capital intensive. We need to do investments. Where are those investments going to be coming from? And what is the cost of capital to drive those investments? Investment decisions aren't going to be happening very quickly. There is a barrier to entry now, and that is that 5% interest rate hurdle that is going to put investment committees to work again to decide where to allocate that money. We also see the fact that it's an election year, and I don't think Powell, who's gone through all this slack this whole period by raising interest rates, wants to really, give back too quickly, because he's just earned his way to get up here with all these hard scars that he's got cut into him deeply for having made the decisions that he made, to all of a sudden just give that back right away with 5 different drops in interest rate over the course of the year. I don't think that's going to happen. So what that means is governments likely are going to be increasing the printer again, right? Why? They need to incentivize the economy. They need to stimulate the economy. They need to show that there's growth and there's job creation. And so money printer go burr again. That is going to drive up money supply. Is there growth in the market to fix that? I don't know, but there looks like they're extracting more money from the market with tax income. Tax income has never been higher than it is now as a percentage of GDP and as a percentage of household income. So I think it's now up to some 28% of GDP, the tax income. So it's actually gone up significantly as they sort of hire, some 80,000 new tax execs or people to come in, accountants to come and track down income and where they should be able to receive taxes. And Yellen has made very clear in a number of her statements that they have a lot of uncollected tax that they feel is due their way in the government. And so all of those compounds should result in a pickup in inflation again. The benefits of tech driving down the unit costs are, they take time to have its impact. And it seems that we've demonized tech, right? So we've demonized crypto and blockchain and decentralization to tie them back to the existing systems that we have. We've demonized AI, where it's only bad that's going to be coming from AI. Clean tech is going to be a government investment vehicle. It's not going to be private entities deciding where and how to deploy into clean tech. Healthcare or gene technologies or personalized Medicare. All of those elements have been somewhat demonized as well and overregulated. So it's like really hard to find windows that are going to drive future growth and bring down unit costs to drive efficiencies. And yeah, unless we see the change in that area, yeah, it's going to be hard to really see the impact of the benefits of what we're trying to achieve in the next year at least. Maybe the year after when we get a new administration, if that's possible, which is most likely, then we might see some changes again.
Yeah, I think the other dominant question is, do we cut? If we cut, do we cut from a place of strength as far as rates are concerned, or do we cut from a place of weakness where, the doomers, man, the doomers have been predicting 10 of the last 0 recessions, but that's on everybody's mind, obviously. Do we cut because we want real rates to come down, which should benefit crypto, should benefit risk, benefit DeFi rates, that sort of thing? Or is it going to be, somewhere in the middle, no landing type stuff?
Yeah, I think on the interest rates, my gut reaction is knowing and understanding and listening to Jerome Powell's constant repetitive talking and messaging. I think his position is going to stick to it. He will not want a reversal in what has happened in the past, where it was in 2020 where they started to jack up the interest. Well, in 2022, where they started to jack up interest rates, and the fastest in history, to then suddenly drop it down and then to have a real hard landing. I think they have built the soft landing mechanism. I think the core inflation hasn't shifted enough for them to warrant any reduction in interest rates in the short term. They will obviously try to balance it out with market interests. I think it's the first time I started hearing Powell talk about that in November. He was continuing to messaging that, and so is a number of other boards coming on board. I think the other thing to recognize that is in January, there's a shift of a couple of members in the FMOC committee meeting. 2 of the members coming on board are much more of a hawkish viewpoint than the 2 exiting individuals that are much more of a dovish viewpoint. So I think so that's certainly one factor that will hold interest rates higher for longer. The other factor is I just don't see any data, even that would resolve and address the fundamental issues that the U.S. consumer is still spending, right? And they're spending like wildfire. And with wages still going up, the tight labor market, the consumer confidence rocket high, I don't really understand, if you let go of interest rates, what would stop that going even further, and then surge back up in the inflation rate further thereafter. And then I think the final factor, which has really caused inflation to be sticky, is the housing market, right? And if you look at the housing market, it's got huge inventory issues in the housing market. The mortgage rates they've come down a bit, under 6 now. They're under 7%. They're 6.7, 6.8, I think, is a 30-year fixed. So, and if you reduce interest rates too fast, I think the net effect of that would be then you'll see a reversal of the trends in the housing market, that it's going to go shoot back up again. So you're going to have to gradually let and adjust for the supply and the inventory to accelerate, and then the mortgage rates to come down gradually. So I think it's going to be a gradual evolution. My gut tells me, based on all the data that we have at present today, that I don't think we're going to see any reduction before May at the earliest. I think most likely you're going to see a June reduction, and it's going to be a gradual 25 basis point reduction thereafter.
You are listening to Truflation Spaces. It's our CPI analysis ahead of the BLS print tomorrow, and we're taking some special time here to talk a little bit of DGen stuff with Bitcoin ETF prospects. Legendary trader Josh Olszewicz is our guest of honor. Again, a real sober thinker. For my money, one of the best people to ask about the Bitcoin ETF, its prospects and what it might mean, which translates to, if you have questions, maybe even a comment, ask to speak. We'll get you up here. You can ask Josh or any one of the All-Star panel any question you'd like. But Josh, throwing it back to you for a second, let's dive into the Bitcoin ETF prospect. Thank God we have adults in the room at the SEC who are guarding us against fraud and bad actors, right?
Yeah, it's look, they did this to themselves. They're trying to make this very anti-fanfare, but it's been a decade in the making. We've tried and tried and tried again to get these applications through. They were always immediately denied. Okay, so that's one thing that isn't happening this time. We've never had BlackRock on our side, obviously. So that's another massive bonus and improves the likelihood that we actually see approvals today. But they could have done a lot better early on, getting us to the finish line here by helping us to check the boxes they want checked over the years. That just hasn't, or didn't happen. So, Gensler's been very anti-crypto, he gets, standoffish when you even ask him about it. I don't know if you guys saw that Kaylee Lyons, I think is her name, from Bloomberg.
Yeah.
I tried to talk to him about it the other day, and he was just like offended by it, But anyway, we do see the ETFs approved almost certainly today. And if it's not today, it's March. So I don't think there's any worry there. There was a lot of talk of like, oh, this is priced in. I think the people who are here and paying attention, it was certainly priced in, but there are people who still don't know what Bitcoin really is, believe it or not. So for them, it's certainly not priced in. For institutions who couldn't access this stuff, it's not priced in. So to some degree, yeah, it's priced in for certain people, but other people have no clue what's going on, right? We're just super tapped in. What else? It's massive because it changes the hearts and minds of what Bitcoin is for people in the institutional space. It's accessibility, it's lower friction, it's better fees. Seeing all these issuers compete on this fee war race to the bottom is super bullish for the consumer. That should pull fees down on the retail crypto side, hopefully, because they're kind of criminal and highway robbery. And it's just a better product than the futures as well. It just should follow and track spot better than the futures products have. And a lot of maxis are super upset about this product because they want everybody to self-custody. And that's fine. They can be upset, but not everyone's going to do that. This is not something that most Joe Public person is going to do. Is buy a hardware wallet, understand all the risks, not get hacked or rugged, and figuring out and navigating what's going on here. So I couldn't be more bullish on the future for flows into this space. Just everything. It changes everything, right? We have a real deal, specifically BlackRock, institutional player who's taking this seriously. Finally, right? I'm kind of surprised it's happening as soon as it's happening, because I just didn't think over the years we've seen so many applications and so much talk about all this that it's kind of surprising that it's here, right? I mean, look, we've got 142 people in the spaces. Back in 2013, 14, 15, it was like 15 to 30 people in a TeamSpeak server talking about crypto. Like nobody cared about it,
That's right.
So it's just really good to see the space continue to flourish and blossom like that.
And Ivan, I think you have a question, right?
Actually, yeah. One question and one comment. First comment is on the thing that you, Josh, mentioned, that Gary or the whole SEC is not not even friendly, but not even helping those applications get approved, where got me thinking. And actually, a few weeks ago, I'm currently in Croatia, and I participated in one of the events where actually the members from the regulatory department from Croatian government were participating in this meetup and answering the questions and trying to help companies to get the licenses, to get approved and prepared for the MiCA regulation that is coming in the European Union, which is quite opposite to what you said, where not that SEC is not friendly, but also it's quite angry and anxious when they get asked about crypto. So completely different point of view and the approach towards the crypto industry. And that definitely brings me to the question. You said you think that the approval will happen today, if not today, in March. What do you think that yesterday's, let's call it mistake with the announcement on the SEC Twitter account, does it help the case or it doesn't? Or basically the decision will be the same regardless of this incident?
Yeah, obviously unfortunate and embarrassing for the SEC. But what I think actually happened was someone compromised their content management system, the CMS part of things is my guess. And so that has access to, all of the stuff that the SEC communicates, content that isn't official government business probably. And that was probably compromised via SMS 2FA or something like that, some sort of SIM swap or something. And then that was used to tweet out. Because as some of you probably know on the call, like Twitter has the ability to connect via APIs or connect via multiple people through a Teams type environment. Anyway, I don't think it affects anything at the end of the day. Like, look, they have a hard deadline that's today for one of the products. They spent a lot of time thinking about how they're going to line up all of these ETFs so that the comment periods end at a certain particular time. They were certainly foreshadowing the approval or decision. We'll say it like that, just to hedge my bet a little bit. But they were lining all that up for this specific period. So it would make the most sense that we either see a denial of the, I believe it's the ARC ETF, right? Which would push everything to March as far as the next approval denial period. But I think that's extremely unlikely, really because they finally come to the table and are asking serious questions about all parts of the ETF and aren't just flat out denying it. I mean, that's the first clue, along with BlackRock being here, that the SEC is serious about actually getting these approved. And the other thing is they lost that court case against GBTC, which means that GBTC doesn't have a date. It doesn't have a hard deadline. They just have a court loss to deal with, right? So like they need to get the show on the road here and figure something out sooner rather than later. Either come up with another reason to delay GBTC or approve it, right? Figure it out, get it done. So it'd make the most sense to me that at this point they will be approving everything. And it's not everybody.
Yeah.
One last thing real quick. It's not everybody at the SEC who's anti-crypto. It's really just the leadership, obviously. But Hester Peirce has been great. There's people at the CFTC who've been great. There's people prior on the SEC who have been really good for crypto, but it's just not been enough to get us to the finish line.
Yeah, it did wake Barry up. I saw him tweeting as well. So we've got a question here from Frazzled Analyst. You're up.
Hey, thanks, Josh. I was wondering if you had any insight on where the liquidity is going to come from for the underlying BTC for the ETFs. Like, they're going to be buying, like, who are they going to be buying from over the counter? Do you think they have deals set up with different exchanges, or do you think that they are sitting on some Bitcoin already? Just curious about how to potentially play the incoming volume spike post ETF approval.
Yeah, I think that's a good question. It's a question everybody's kind of asking as well. Like, how is this plumbing actually going to work? How does the seed capital work? From my understanding, they have the seed capital lined up and they have to go out and buy the BTC. That won't be like a giant market buy. Obviously, it'll be handled through multiple OTC providers. Probably all of the OTC providers will be talking to the APs, the authorized participants. And if you look at the plumbing flow chart, there's a ton of hands that are going to be touching all of this stuff, which is a good thing because it's going to be SBF proof, as they say. But by the looks of it, based on the seed capital, I think it's at least 3 billion, if not 4 or 5 on the initial slug. So it's shaping up to be probably one of the best launches on record ever. Maybe the BlackRock product will be the biggest ETF launch ever. As a group, collectively, I certainly think it's going to be the best ETF launch on record. And that's not going to make Gary happy, but again, they did this to themselves. Think of all the headlines that have been generated over the past 3 months, just nonstop, right? And that's in everyone's face. So that certainly helps bring attention to what's actually going on here. As far as on the year, I don't think we see more than 50 billion. I think last year the VU ETF saw 50 billion, which was the record for any single product in 1 year. I'm guessing more than 10 billion on the year, but it's tough with institutional folks. You have to understand, like, it's slow, right? It's not like they're going to just throw billions of dollars at this. They're going to have to go to their investment committees and get approval and discuss it and talk about the risks and understand where this fits in their portfolio and figure out the sizing and all that stuff. But we do have an army of salespeople selling this, so that's really good. And we have, like I keep saying, we have a real deal blue chip name attached to all this stuff.
Is there, just to push back a little bit to kind of be the turd in the punch bowl here? I go the first kind of FOMO institutional acceptance that I can remember would be the Merck CME SIBO right around 2017, and all the kind of the hysteria that pushed that price. I got paid in Bitcoin at the time, so my salary doubled, tripled. So it's vivid in my mind with all the hype leading up to it, and then it just kind of went. It just didn't really do anything. It just kind of laid flat. The ICE derivative that escapes me now was coming online. Is there a danger that all this ETF talk will lead to, as Frazzle said, like kind of a spike? You want to get in on the spike and then it just kind of dies on the vine, or is this something just completely other? As the way that you're talking about it, Josh, it just seems like this is definitely a hinge of financial or finance history.
Yeah, I mean, if there's anything that can change the prior cycles, as far as we have our bear market, then we have our recovery, then we have halving, then we have this slow grind higher, then we have this retail participation phase, and then we sort of have this blow off top. If there's anything that can change that, I think it's this type of product. At the same time, you have to also respect, like, historically, using technical analysis, in a pre-halving year, or pre-halving period, I guess that we're in now, we've never exceeded, it's called the 618 Fibonacci retracement of the previous bear market, which is around 48,000 to 49,000. So I would say, like, look, that's probably the ceiling based on history. So if we are above 50,000 and we stay there, that is completely uncharted territory for a pre-halving environment. And that would be very indicative that things are different this time. Things are actually different this time, right? So if we spike to that level and consolidate in the 50s or hold at that level, then it's a whole new ballgame. Some people would argue that, yes, because of the ETFs, we're sort of pulling forward the cycle and accelerating things a little bit. I think that's certainly possible. But you have to be careful, because we're getting close to that tipping point where, yes, historically, like you said, the launches of products have been the top. So, you've got Dan Moorhead at Pantera saying it's buy the rumor, buy the news. You've got people saying by the approval sell to launch, which maybe we may see ETFs trading on Thursday this week. So it could be zero actual time in between, legacy trading days, at least in between the approval and the launch, if the approvals are by 4 p.m. today, and then they start trading on Thursday. So we are in this precarious period where it's hard to really know until we see price action. Obviously, traders are super keyed into the news and the volatility event, and we've seen plenty of fake news move prices and everything you can imagine, right? This is crypto. This is why a lot of us are here, for the entertainment. So I personally think we try to go higher and try to hold higher, but ultimately I just think we're going to need to see what happens this week, next week. It's less about what happens at 4 p.m. today and more about what happens throughout January to me.
Right. It makes a lot of sense. You are listening to Truflation Spaces. It's our pre-BLS CPI print analysis ahead of tomorrow's BLS official print. We give you all the analysis way before the government can. And if you are so inclined to read the inflation analysis that we put out for December, you can find that on Truflation.com. Just go to the premium section or the pricing section and choose a premium package that works for you. Get granular, get ahead. Do not, if you're investing or you've got a business or you're market dependent, do not walk a block without Truflation Premium. Just telling you now, we've been ahead for a while. So maybe switching from Bitcoin to the broader digital asset space. I'm not sure how keen you are to talk about that or to analyze it, but I'll ask anyway. Kind of, what are your thoughts on? We're real big on decentralized exchanges. We like the potentials there. We also like real world assets, the RWA classes that are coming up. We love tokenization of commodities, all that sort of stuff. I'm not sure where to start, but let's just start with RWAs. Do you have any thoughts on real world assets and what you think of that?
Yeah, one last thing I'll say on the ETFs. It's funny that we, of course, have a pretty important CPI print on the same day that the ETFs are supposed to get approved, right? We can't just have something simple where we're not
That is funny.
We're not dealing with this print that's going to be higher month over month. How's the market going to handle that? Is that going to cause some sort of headwind on the ETF announcement, right? Which is certainly possible if the market isn't pricing in this higher month over month print, but then a lower probably month over month print next month. Anyway, yeah, RWA. The biggest problem is it's too risky and too expensive on chain, I think, at the moment. The actual biggest problem is probably dealing with full regulation, KYC, AML. Most of the RWA products are fully compliant, at least that, as far as I can tell. Things like Maple and Goldfinch. So what we think on the crypto native side is what crypto looks like and is and feels like is not what in reality is what this stuff is able to be, as much as we want it to be just freeing and decentralized. And I just don't think that's where we're going to end up being at the end of the day. I think all of DeFi is going to be KYC'd or geofenced from the United States, unfortunately. I don't know how it is in Europe with MiCA, but I can't see the regulations getting any better for DeFi, unfortunately, in the United States, regardless of the political regime, Biden, Trump, whoever else. I think they all really want to come down on DeFi, which is unfortunate, but I don't know, unless we vote these people out, what else are we going to do, right? So I do think we see the RWA stuff attempt to take off. Tokenization especially is going to be huge in ways that I don't think we can fully comprehend. But like I said, it's risky, it's expensive. There's just better ways to do RWA, in my opinion. Or just, go to Coinbase and get 5% on on USDC, or go to Robinhood and get 5% there, or go to any brokerage account and get access to treasuries, or go to public.com, whatever it is, right? There's just so many other ways that if you're truly going towards a no risk or risk-free instrument, all of a sudden I have to worry about smart contract risk and Oracle risk and all this other stuff that I just don't have to ever think about touching the classical, TradFi stuff.
Yeah, it's interesting, the dilemma that's poised there. Are you bullish on any other digital assets outside of BTC? Do you see much room for things like ETH or any of the top 10 or beyond cryptos?
Yeah, I think a rising tide raises all boats. Certainly, if rates do come down, historically that's super bullish for alts. To see, it's kind of like Cohen talks about this, Ben Cohen. It's kind of like IWM, right? These lower end businesses are seeing all this rate pressure because they have to refinance or they just can't get the capital. And in some respects, alts are kind of the same, right? They're these risky businesses, or risky, not businesses, legally speaking, not businesses. They're these riskier products that are super, super rate sensitive. Of course, all of the DeFi interest in the rates in DeFi are super rate sensitive, IRL rate sensitive. Just as we saw, interest rates rise in the real world, in the meat space, we saw DeFi interest rates plummet, right? So we should see some rate relief on the DeFi side if we see risk on, if we see people coming back to DeFi in a bigger way. So that's bullish for DeFi potentially throughout the year. We are seeing some ETH price action finally a little bit. I know a lot of people are super, they're trying to bottom tick the ETH BTC price. I just don't understand it. But there was this onslaught yesterday of all these CT crypto Twitter influencers saying that, now's the time to rotate into ETH. And I don't see how the flows for Bitcoin on the ETF side are going to be beneficial for ETH in regards to the ETH BTC price. You also have all of these companies still selling ETH, Celsius being the principal among them. I think they have something like $1 billion notional that they have to sell. They're just TWAPing out of constantly. So you just got a lot of selling pressure on the ETH side. And some of these other alts have had a massive run last year, obviously, in the last quarter of last year. So the question I have for those, like Solana, do they really have another 50, 100% in them pre-halving? I don't know. It would be great for the entire space if we have this massive cleanse leading into halving, as we typically always have. It's 2016, it was the Bitfinex hack. 2020, it was COVID. We always, for some reason, right, we tend to see this massive down move, and then liquidity helps us on the tailwind. So if that's the case, alts should do very well throughout this cycle, throughout 2024 and 2025.
Yeah, fascinating. Once again, you're listening to Truflation, CPI analysis and Bitcoin ETF with Josh Olszewicz. He's a legendary trader. He knows from what he speaks. Great chance for you to ask a question here. And it looks like we've got one from Tim Howard. Tim, you are up. Go right ahead as soon as you're able to connect. Go ahead, Tim. You're up to speak, brother.
Thank you very much. I had a couple of questions because I've been under an impression that I'm really looking forward to the U.S. digital dollar. I've been really, really pushing for it on a lot of levels. So without being for or against anything to come in and try to sway anything, I would love actually some input and or where everybody thinks I should go with it. And that's with, I love Bitcoin, I love ETH, and I think of digital assets outside of a digital dollar being more like jewelry and or accessories than an actual commodity, and my goal is my focus is smart contracts, mostly with passing through actually copyright and intellectual property, and then liquidity second, and then third and foremost, the ability to jump in and out of what I see as the future versions of all the digital dollars in the world banking system and DeFi that kind of coincides. And that's kind of where I'm at, and I'm curious where everybody thinks I should go with it.
Well, I guess I'll start. um, Depending on your viewpoint on a CBDC, and what we've seen overseas, to me, is problematic in China specifically, as far as the government control there. I view certain welfare programs already as a certain type of CBDC where there are restrictions, there are limitations on that. So I think we'll get there, unfortunately, in the United States. We have already products in crypto that could act as a CBDC. Look at USDC. I mean, that could be the CBDC at the end of the day, right? If we want a stablecoin bill, we'll regulate Tether out of the United States, out of existence, even though they hold a lot of US treasuries. And USDC could be a de facto CBDC. But the government could also obviously issue their own. I just think there's not a lot of trust in government in general. So it's going to be hard for people and businesses to want to participate in that ecosystem, even if it's incentivized. Maybe we get UBI via CBDCs, that's also a possibility. I just think we're a little ways out from stuff like that. The smart contracts, copyright stuff, I think is super interesting. It's been tried. There were some ICO projects in like 2017, I think, 2016, 2017, that tried that. Never really got off the ground, I don't think. But that's where I think we need to go with like contracts and, let's get rid of the lawyers and everybody else who touches that stuff. That to me seems more realistic and doable. I just think there's going to be a lot of political pushback against a CBDC as inevitable as it's going to be in the United States, and arguably as it's kind of already here, right? There's a war on cash as you will already.
Yeah, just going to spectator sports here in the United States. Wasn't ready for it. Had a mound of cash. Tried to walk up to the local sports ball stadium, and they were like, "Nope, sorry, dum dum. Everything's digital." And that was a real wake up call. Like I couldn't, for a beer or whatever, I couldn't hand over a couple of shekels. I had to pull out the plastic and be monitored, which is just a fascinating turn of events. And we've seen a lot of talk just recently from the ECB, Christine Lagarde, and they're well on their way to having some sort of digital euro. So interesting times to say the least, scary times in some respects. But want to thank Josh so very much for handing over an hour of his time. I know it's real valuable. We really appreciate it. Josh, how can people follow your work, man? I know you're gonna get a lot of new followers. How can they follow your work and keep up with what you're doing?
Sure, yeah. Thanks for having me. Thanks for all the stuff you guys put out. Which most of it is free, by the way, so thanks for that. But you can follow me at Carpe Noctem on Twitter, Carpe Noctem on YouTube, and I also have a Discord if you're interested in checking that out. All my stuff's free as well, so that's it. Just living the trading life.
Very nice. We do appreciate it. Thanks to everybody who listened, asked the question. It was a really, really good spaces. We're back on the 31st for the FOMC, the Fed decision, kind of what we were foreshadowing in this spaces. Let's see what Jay Powell is up to. And again, that's on Wednesday, January 31st. It's always at 9:30 a.m. Eastern time. We'll have Fed analysis for you, and really kind of dig deep into what may be the case going forward in 2024. Again, apologies for my voice. Hopefully it'll be better by then. Thanks everybody for tuning in. And if you can, get out to Truflation.com. do look up Truflation Premium product that is best for you. And we'll see you in 2 weeks, everybody. Bye for now.